This is the Retirement Key Podcast with Abe Abish, founder of Abish Financial Services.
A lot of firms out there say they will do tax planning, say they will do Social Security planning and RMD planning, and typically they just do investment management. They want your money.
You've worked hard your whole life to earn and save. Now you need a plan to make that money work hard for you.
Where do you stand today with your retirement accounts, with your insurance, with Social Security, RMDs, taxes, all of it? This is how we need to think. We need to think outside of the box on these matters.
Abe is here to help you unlock the keys to your retirement.
Can't get away from inflation. It is just on the mind of all of us right now, Abe. The highest inflation rate in 40 years. We're all feeling it on our wallets. The Federal Reserve is trying to get it under control by starting to raise interest rates, but will that be enough? Economist Mark Tepper says probably not, and tells Fox Business Mornings with Maria.
Right now, the Fed Fund Futures is expecting 8 more hikes this year. That would put us at 9 total hikes. And I don't think the market or the economy can handle 9 hikes. I think the economy will break before we get those 9 hikes in. And unfortunately, that's not going to cure the inflation problem. So, you know, it's kind of a catch-22. And I think the Fed's going to have to hike us into a recession and continue hiking while in a recession.
9 hikes, wow. And then the idea of hiking us into a recession. Obviously, nobody wants to lose their retirement money if the market goes down. Abe, do you see this as a high-risk time for somebody who is getting close to retirement? How are you helping somebody in this economic phase that we're in?
It is a tough time. It's a tough time to put together a plan and a tough time to kind of maneuver. That the waters we're heading into are unknown and uncertain. And I do think that a recession is probable and is potentially coming, especially because of these rate hikes. And I do believe personally that, and we as a company, that there's way more pressure on the down right now than the up. And we have to be careful, especially as we're darn close to retirement or already there. And we have the opportunity right now, Heather, given the incredible run that we've had in the market the last 3, 5, 10 years, to actually secure, clip in, protect, preserve a lot of our life savings right now. I was just meeting with a couple and I was telling them, look, what we've gone through right now, the first few months of this year, is a blip compared to what it could be. A blip in the radar, right? Compared to what it could be. Yes, everyone's down right now, maybe 5 to 10, 5 to 7%. That's nothing compared to a negative 20, 25, 30+% or more. Matter of fact, CNN Money has what they call a fear and greed index, Heather. And this index ranges from extreme fear, like anywhere from a 0 to 25, to extreme greed, you know, when the number's already all the way over at 100. Right now, we're in the fear section between 25 and 50. And so people are definitely more fearful right now than greedy. Okay. And, you know, that's because of all the uncertainty and volatility in the markets, what the Federal Reserve is going to do, the war over in Europe, inflation, and all of this. More than ever right now, Heather, we need a plan. If you are 55 years old and older, and you're getting close, and most of our clients are 60 and older, retiring this year, retiring in a few years, now is the time to be proactive. People always say buy low and sell high. Now is the time to be proactive, to build in a plan for good times and bad. And so we just had a couple call in, Heather. They are in their early 60s. They live out in the Winchester, Virginia area. They have about $1.6 million saved. They want to retire as soon as possible, and they are moderate investors, about a 6 on our risk scale of 1 to 10. They are a little bit fearful, wanting to get out of harm's way, wanting to secure and protect their life savings as they want to retire. And their concerns are, how do we generate income because our working paychecks are going to stop? And how do we protect the last 40 years of our work? The problem was, and they knew it, is that they didn't have a plan. So they have an investment advisor like at a bank, and you know, this person isn't doing anything for them. They're like, he's not giving us advice and guidance on the whole plan. He wants to sell us some products inside our IRA. You know, he wants to sell some mutual funds or some stocks, but he's not giving us guidance on the whole plan. So some of the problems were that they didn't have a plan at all. No plan for income, no plan for how to reduce risk at the point of retirement, and no plan to help them transition from their working career into retirement. So they're kind of feeling stuck and a little fearful based on what's going on in the markets. What was the solution for them, Heather, as with many of our clients, a comprehensive retirement income plan. We nickname this a GPS for your retirement, a retirement roadmap.
Okay.
An income producing plan. See, this couple, as with most people in this area, are asset rich, income poor. They have a lot of assets. They have a couple real estate properties, approaching $2 million saved, but no plan. No plan for how to transition from their working career into retirement. No plan for how to generate income and how to reduce risk on their almost $2 million saved. So we reduced their risk down to a 6. We brought them down to a 6 as they were taking on more risk than that. And we helped them with a plan to transition and retire within the next year. This is what we help our clients in with a where do I stand plan. And in that where do I stand plan, Heather, it encompasses an income plan, an investment plan, a plan for your taxes, and a plan to transition into retirement if you haven't already as successfully as possible.
All right, so obviously a major factor in that complete plan you were just referencing, Abe, is the idea of figuring out our tax plan within that overall plan. With that, we have to say Happy Tax Freedom Day to everybody. A group called the Tax Foundation actually did the math to find that Monday, April 18th, is the day that Americans finally have earned enough money collectively to pay off all the federal, state, and local taxes that we'll owe for the year. So from this point forward, we're now working for ourselves again, unless, of course, Uncle Sam decides to raise our taxes in the meantime. Surprisingly enough, most people still don't do anything to lower their tax obligations, Abe, even though there are strategies designed to do that. Have you seen in your experience people who actually end up paying more than taxes than they have to?
Absolutely, all the time, Heather. And it's simply, I would say for the most part, it's just not addressed. Like most financial advisors and retirement planners just don't address tax planning. I think it's kind of slipped under the rug and ignored a lot of times. We just met with a couple recently where they had $4 million and came in from Mount Airy, Maryland, and they're working with a big box investment firm, and taxes were never discussed. Like I went through how we can put all of their income into our tax planning software and let them know, does it make sense? Like, should we even consider strategic tax planning to pay some of our fair share now? And they were like, wow, this is great. Like we didn't think about that. And it was never brought up to them by their current investment advisors. So shame on our industry for not trying to address and tackle taxes, which are for most people our biggest expense in retirement. So absolutely, yes, there are ways to lower and mitigate tax. And if it's going to be our biggest expense in retirement, which for most people it is, why are we ignoring it? And for the next 4 years, unless the tax code changes, as you mentioned before, taxes are on sale. Through 2026, we have another 4 years to try to transition and shift assets from pre-taxed accounts like 401ks, TSPs, and IRAs to Roth IRAs and other tax-free buckets and accounts. So we just had a couple call in. They're in their mid to late 60s. They live in Herndon, Virginia. They have about $1 million saved. They're retiring soon. All the money's pre-taxed. So they've done a great job of saving, but all of the money's in 401ks, TSPs, and IRAs, and it's all pre-tax, never been taxed before. And they're concerned with taxes going up right as they retire, which is in line with their retirement. So what was the solution for them? A tax mapping analysis and a tax plan. We determined, Heather, with this couple, that we can convert $50,000 a year from their TSP, 401k, and IRAs over the next 4 years before the tax code changes and still stay in the same tax bracket.
Oh, wow.
That's about $10,000 in tax savings, which equates to, this is now $10,000 of tax savings in their pockets. If we have $10,000 today, and let's say we earn 6%, like a modest return in the market over 30 years, 6%. That would turn into $75,000 to $80,000 for them that are now back in their pockets by recouped tax savings.
Wow.
So wherever we can save our clients monies, whether it's on fees, on taxes, wherever we can, we want to do that. And so for any of you listening right now, if you are concerned with the status of this country financially and you believe, like most people, and as we do, that taxes will go up in the future and that you will be likely paying more tax on your TSPs, IRAs, and 401ks. If you're 55 years old and older, and if you've saved $500,000 or more for your retirement, then go to retirementkeyradio.com. Click on the Contact Us tab at the top of the page. Our team will be in touch with you, and we'll offer you that same complimentary tax mapping report and analysis to help you determine ways to help lower and mitigate tax.
thanks for listening to the Retirement Key Podcast with Abe Abish. To learn more about Abish Financial Services, visit retirementkeyradio.com. And join Abe for his radio show, The Retirement Key, Saturdays at 2 p.m. on WMAL.
Financial professionals are not licensed in all 50 states. To find out if Abraham Abish is licensed in your state, please call 571-577-9968. Abish Financial Services is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Abraham Abish, NPM number 770-3575.